This is the Business Growth Hacks Podcast, presented by Beefy Marketing. Here's your host, Andrew Brockenbush.
What's up, everybody? Welcome back to another episode of the podcast. Glad you're here. Glad you're listening. Somebody has to listen to us talk. I mean, come on.
That's right. Thank you.
We don't do this for no one. So thank you guys for showing up every week, for growing your business with us, growing your agency with us. We appreciate you showing up every single week. Super excited because we've got a great guest lined up for you guys today. But before I get into that, we've got to thank our sponsor. Today's episode is brought to you by Wingman. Wingman's all-in-one marketing and sales automation software helps you streamline your communication, automate your processes, and grow your business. Check them out at trustyourwingman.com. Everybody needs a wingman, am I right?
Everybody.
So make sure you check that out. John, let's do this thing. We always do.
Let's do it.
Icebreaker.
Okay, it's an icebreaker time. Nolan, what's up, man? I've got one for you. If you could describe your job using only emojis, which emojis would you use? Which ones would you use?
That's a good one. What would not be a calculator? I'll tell you that to start with, because I feel like that's the biggest stereotype out there, right?
Right.
I'll say the pensive thinking emoji, the one where he's kind of like looking up.
Nice.
Yes.
That's good.
Yeah. I think
All right.
I think I've got to use two to make it make sense. The thumbs up for good take.
Yeah, good work. Good job.
And then the scissors for when we're going to cut it up and edit.
Yeah. Fix it in
like
post.
the Dave Coulier,
fix it in
they
post.
cut it out.
Oh yeah, cut it out. I forgot about that.
I am of a certain age, so we're going back a ways.
That's right. That's awesome. Hey, I think for me, it depends on the day we're on, okay? Because sometimes I got the little face palm emoji rocking.
Yeah.
Sometimes I got the little poop emoji, depending on what's going down.
Depending on the day.
Sometimes the little censored mouth,
Oh, yeah.
It just depends on the day. I'd say most days it would probably be just the really excited, really happy. I think we have a lot of fun around here. And so that would probably be my go-to emoji is one that just kind of shows people that like we don't take ourselves too seriously. Like we're like with a company called Beefy Marketing, you can't really take yourself too seriously from the start. So, hey, we've got a great episode planned for you guys. We have the privilege of welcoming Nolan Bradbury, a seasoned professional dedicated to helping business owners achieve their dreams through expert accounting and financial strategies. With a passion for empowering entrepreneurs to unlock their enterprise's full potential, Nolan understands the critical role financial stability plays in achieving success. Over the past 2 decades, he has gained invaluable insights from both the public and private sectors, honing his expertise in financial management. We're so excited to have you, Nolan. Welcome to the show, sir.
Thank you for having me. Pleasure to be here.
Heck yeah, man. There's going to be a good conversation because accounting, that could be exciting.
So
that could be frustrating.
Yeah, so I like to actually, it's perfect because I was going to give a little bit of a PSA before we get into this, because there's probably some people who were going to read the podcast description and go accounting. And then there's going to be like this uncontrollable cringe from them where they go, ooh, right? And there's like that's the reaction that people have. But I get it. Accounting is not typically what business owners sort of go to when they want to relax and unwind at the end of the day. Like that's not really like the go-to mood. But if you've made it this far, I kind of hope to reward your perseverance by demystifying the accounting and kind of help you guys understand that whether like arguably accounting is one of the most important cornerstones of any business. And so you got to have a good relationship with it.
Yeah, absolutely. I will make sure that the podcast title is something like "Not No Podcast." I really am excited for this conversation. So why don't you take us back at least a little bit? Did you know that you were going to go this career, or is this like a surprise career?
Yeah.
Like, how did you get into it?
Great question. It's almost like we talked about this, but we didn't, I swear. Funny story. First off, I think very few people set out to go, I'm going into accounting. That is a very small demographic of the accounting subset. For me, it was, I took an elective in high school, and I was actually really good at accounting. And the teacher really tried to get me to go into it, and I resisted like you cannot believe. Like I was like, nope, I'm good, thank you. That was a fun class, but never want to do that again. I had planned to go into more of the psychology realm. I was always fascinated by human behavior, why we do things that we do, what motivates us, that sort of thing. When I got to college, though, I realized that I had to take more foreign language to go into psychology, and I couldn't do that. I had taken like 6 years of French at that point, and I was like, no more. I'm terrible. It's not good. And so I took some more accounting and got really good at it, and realized it just kind of came naturally to me, and I oddly enjoyed it. There was something about it that was kind of fun, if you will. And so that's actually how I ended up in the past. So I have a dislike of foreign language, I guess, to sort of be the motivating factor for me.
Okay. So have you always been a numbers guy? You're pretty good at like math and stuff like that in school as well, or not so much?
I wasn't bad at math. I wouldn't say I loved it. What's interesting is I think accounting is actually very little math, if you want to know the honest answer. Yeah. Accounting is actually more problem solving. I think that tends to be what I enjoy about it. It is a puzzle. It's about looking at a situation and trying to understand why it is what it is and how you need to sort of present it or take care of it, if you will. The numbers, I mean, I'll demystify this for you. Like, we use Excel a lot. And so I don't actually do a whole lot of math anymore. God bless technology. But yeah, most of it. Exactly. So most of it for me is it's the puzzle solving piece of it.
Yeah.
And it is a puzzle. It is certainly a puzzle, which we are going to get into that conversation. It's so funny. You made the comment about, like, you don't use a calculator that often in the advancement of technology. I just saw a meme the other day that was talking about the fact that, like, our teacher said that we're not going to have a calculator everywhere you go. Look at me now.
That's 100% right.
Yeah. That's so true, though. I mean, I'd like to kind of talk a little bit about the fact that I've had some pretty negative experiences, some that of my own wrongdoing, if you will.
Sure.
Yeah.
And those of just maybe misalignment between the people that I hired and myself, because I don't consider myself an expert. And so maybe we're not speaking the same language, which, like, I'd love to get into talking about some of that too. But why do you think there is, like, such a negative connotation when people think of accounting, when they think of an accountant, when they think of taxes, when they think of bookkeeping? Like, why do people have such a negative relationship with that part of business?
So this is where the psychology part of my background is going to come into play a little bit. So bear with me here. So I think that there's a couple pieces. One, from my experiences in working with, like, thousands of business owners, like, very few of them come to me and go, I enjoy accounting, but I want you to do it for me. So kind of what you described, right? Which is like, there is this reaction to it, like they just don't like it. Okay. And then there's ironically a survey from a few years ago that basically interviewed surveyed business owners, and they said it would basically the function of owning a business that business owners like the least was accounting. Okay. And so it's the thing that if you run a business, you hate the most. In other words, that's the short moral of it, right? There's an old Jerry Seinfeld joke where he used to say, public speaking is a bigger fear than dying. So basically you'd rather be in the casket than giving the eulogy, right? And so it's like this weird thing about how accounting is like this really despised, disliked thing. Now, before I get to, like, why that is, I think the thing that's important to understand about it is that this is a fundamental problem, because what we know about ourselves as humans, right, is that the things we don't like, we tend to avoid, right? And so because we avoid them, they get devalued and they become a problem for us. And then that sort of becomes this vicious cycle, right, where then it becomes worse and we avoid it more because we know it's worse and we have some shame associated with it and so on. From my experience, though, I think there are usually 5 main reasons that people tend to kind of not have a great relationship with accounting, right? So one of them is that the data they get from accounting, either their accountant or themselves, right, from the system, it isn't reliable, right? Meaning it's not accurate. 2, it's not timely. So, it isn't there when they need it. 3, it isn't tailored to their business. It's too generic, if you will. 4, the data isn't being explained to them in a way that they can digest it. So that's like a really big one, right? Because as you said, like, we're not all accounting professionals, right? We don't know how to interpret it. And then lastly, and this is where if you have an accountant, this is more applicable, but the expectation in the relationship between your accountant and you isn't really in alignment, meaning that you both have sort of different ideas of how this is supposed to happen. And my whole thing is, like, happiness is the difference. It's the absolute value between the difference between your expectations and reality. So the closer you are to your expectations, the happier you're going to be.
Yeah. Yeah, I don't think that could be said any better, because I feel like that's the biggest disdain I've had in relationships with prior accountants, is what I expected or what was promised, and then, like, the lack thereof of that delivery or follow through on that. And it's like, well, on paper you're promising this, and I feel like I'm only getting this. Like, what am I actually paying for? Like, if it's only this, like, that's fine, but tell me it's only this, because if not, I'm left looking for this other thing. Like, I'm still thirsty.
I mean, accountants are no different than a lot of service providers in this way, but we make my brother and I, we make promises. We like, this is how we're going to change your life. This is why we're different. The reality is, and I mean, I don't mean to oversimplify it, but changing accountants isn't always going to just solve the problem, right? The problems, like we just identified, they're inherently reciprocal. They're both sides of the relationship. So having reliable data, yes, you have to record it, but there's also information that's needed to be able to reliably record it, as an example, right? Yeah. So I think it is a complex thing. And like I said up front, because we've had bad experiences with accountants or accounting in general, it reinforces like this dislike. We kind of come into it with a negative perspective on it and then that just kind of puts us from playing from behind.
Yeah, for sure. I mean, I've got a good question for you, which is, how do you think the accountant relationship, both both ways, right? Like the client facing and vice versa, like can actually be a limiting factor for business owners? Like because in my opinion, like it's like a crucial component of business.
So I think the first thing I always come back to, one, you have to view it as a relationship. All right. So I think the first thing that can happen is, from the business owner side, we view it as, I'm outsourcing this thing I don't like. That's not going to set yourself up for success, because you view it as like, you're almost like this person is doing you a favor, and that creates this sort of weird dynamic without getting into too much of the psychology around that. I think from the accountant side, where it can get into problem is that it's very transactional for them. No pun intended, but like literally they're like, hey, I'm doing these things for you. And there's a reason for that, right? Because we have this scope creep is a big thing, and like you can end up having this time suck. And so we have to be very protective of our time anytime we're, as business owners, selling our time. But I think that, so the first thing is like having the right expectations around that relationship in terms of like, both sides. But I think the other piece of it, communication is the key piece to any relationship, right? So once you've identified it as a relationship, then you have to have solid communication. So what I mean by that is, how regularly are you talking to your accountant? Okay, so if a very common thing, right, especially when it comes to taxes, I hear from people is like, I hear from my accountant once a year in March, February or January or whatever it is. It's like, okay, no criticism to your accountant, but the reality is that's probably not what you were wanting as the client side of things or the business owner. And so now we're out of alignment with expectations. But to solve that, we have to communicate that. Like when you're setting up the engagement, being very deliberate and clear about how are we going to communicate? When are we going to communicate? And then more importantly, in recent years, what is the method of communication? Generationally, I see more so with younger clients. They want a text, they want email, they want less phone calls. It's just the nature of sort of how we do business now, and it's become more common. And so I think having a good understanding of like what is the expectation around that relationship and how you're going to communicate on each side is critical to that.
Yeah, I mean that's definitely something I struggle with a lot. Is so the current agreement I have with my accountant is a monthly subscription kind of thing, where we get a business and personal return at the end of the year. But and maybe that's all I'm paying for, but if I'm paying monthly for whatever reason, I don't know if it's like a psychological thing, but I still want something every month, even though I'm maybe just financing out the end of the year larger purchase. I still have this psychology thing where it's like, but I'm paying you every month. Like, what are you doing for me on a monthly basis to help my business?
So this is another thing that, and it's not just accountants, but we don't often do a good job of taking credit for the work we do. And what I mean by that is that in any job, right, there's a lot of things that have to happen to get to the item that's called out on a scope of like a service engagement, right? So it may say like record transactions. Okay, well, to do that, there's a lot of things that are happening up until that point, right? And business owners in general, not just accountants, we don't do great at going, hey, here's all the things I've done. That you aren't aware of behind the scenes. And so one of the things I try to help my team understand is like, hey, help me understand what we've done to this point so that I can let the client know, like, even if they haven't heard from us, even if there's someone who isn't signed up to get a financial reporting package from us, I always still try to send them a message. It's like, hey, just want to let you know, we've closed your books for the month. We don't have any questions, or hey, there's a couple questions that we have from you. And then I always give them the option of like, I've listed those below, Or if you'd rather hop on a call, here's a link to schedule. Let's discuss them. Giving them the option of how they want to engage with me, but also letting them know we've done this, right? So that there isn't that issue that you just described of like, what am I paying you for? And why am I paying you monthly? Because we're not really talking monthly. And that's a problem, right? Because that starts to creep in, and then you kind of wonder like, well, what, I mean, the worst question, right, is the question you get asked of, what am I paying you for?
Exactly. Right? Yeah. And we're like guilty of the same thing, right? Like, so I'm not saying that this is an accounting issue.
It's a business issue.
Just like, it's a business issue, right? Like, so we do a big portion of our business is website maintenance contracts, right? And there's a lot that, like you said, there's a lot that happens behind the scenes that like I don't necessarily feel the need to tell a client about. It's just stuff that we have to do, right? Updating plugins, cleaning up spam comments, making sure that the servers, optimize correctly, little stuff that like, it's just like autopilot for us. But if the customer for 6 months never had a support request and they're like, well, but what are you doing for me? Because I never asked you for anything. And it's like, well, dang, like now I'm like having to like backtrack and tell you that, well, I really did do stuff for the last 6 months. And so I think you're exactly right. I think setting expectations early on, around like, what can I expect and what is, what's within reason, what's not, all that kind of stuff would be really helpful.
One other, I was just going to say, the other thing too, I think is, at least when I talk to a client, I try to frame it, and I always like to use analogies. And so one of the things I'll describe to them is like, look, part of the reason you're hiring me is I'm going to act as a bit of an insurance policy for you, which is you may not always need me, but I am here should something come up. And it's just like you have car insurance. You paying this premium, you hope to never have an accident, right? You're kind of paying to never use this thing to some extent, right? But at the end of the day, if something happens, hey, the insurance is going to be there to take care of you. And that's kind of my role as well. You may not need to talk to me every month. You may not have a question that comes up every time I reach out to you, but know that I am here if you need that. And that's part of what you're engaging me to be is I'm available for you.
Yeah. Yeah. I think that there's kind of also been this huge shift in like the accounting role over the last decade. I mean, even from when I started my business in 2013 and now, like I never heard of anybody talk about like virtual CFOs back then. Like back then it was like, you need a bookkeeper, you need an accountant. Like those are your two money people, right? Like a tax guy and a bookkeeper. And now it's like, there's all this like new lingo, like virtual CFOs and virtual CMOs and COOs. And it's like, okay, well, like, now what do I need? So I wanted to bring that up because I do think it's an important topic, and I wanted to ask you about it because there are layers to like maybe what like the average businessman might think of as accounting. Accounting, I mean, even me, when I first got into this, accounting to me summed up like the books and the taxes. Like the money stuff, I just need somebody to handle. That's accounting stuff. What does your company do? And like, are you guys virtual CFOs? Is that what y'all are doing?
Great question. So accounting is one of those odd words that is both vague and very specific, but it's like we each have kind of our own definition of what it means, right? And this goes back to like sort of the disconnect, right? Is that's part of the inherent problem. Is like we have our own definition of this word that doesn't really have a specific definition within the general lexicon of business, right? So there's bookkeeper, there's accountant, there's enrolled agent, there's CPA, there's tax preparer, and those could be all the same thing to someone, but they're not all the same thing to the person who has the title, right? And so that becomes a bit of a challenge. So so that's kind of the first part. To answer your question, what do we do and sort of what does that actual word look like? So my firm, we focus on the bookkeeping piece of it, which is basically the recording of transactions and basically in essence, we are outsourcing taking care of your accounting records. So making sure that things are recorded correctly, completely on time, presented fairly, all that good stuff. I don't prepare taxes largely because it doesn't interest me, if I'm being completely honest. It's more legal in nature than it is strategic in nature for me. I'm not saying that is the case. I'm just saying for me personally, that's kind of how it sits with me. So that's where we tend to focus. And then we have a series of a lot of our clients then will also engage us to do more of what you kind of refer to, which is like fractional CFO work, or a better way to describe it is like outsourced business advisory, maybe, which is like we kind of act as someone who is it helps the business owner sort of vet their thinking process. This is sort of what I describe to people is that what I have found to be very fascinating is that business owners in general, not all, but a lot, are kind of lonely. And that's because one, COVID severely enhanced that because a lot of us went to working remotely. But two, business owners, they have friends. Most of their friends are probably not business owners. Some of them are. So you go to these parties and you're standing around talking, and everyone's talking about their 9-to-5 job, and then there's you. And it's not really relatable in terms of like your problems versus their problems. And I think that there's oftentimes a disconnect because people think, oh, well, you're a small business owner, you must be crushing it. And they sort of view you as like making a lot more. You're like, I am working my ass off over here to try to like just make it through the day, right? And it's like it's a very unrelatable thing. And so what then ends up happening is because they're sort of on their own, they don't have anyone to really vet the thinking process. They don't have anyone that they can be a sounding board with them and going like, hey, I'm thinking of doing this. And I don't necessarily view it as my job to tell them yes or no. I view it as my job to go like, here's how I would look at it. Here's how I would play it through. Here are some things to think about. And then just kind of make sure that they have the right voices coming at them to make sure that the decision they come to is the most educated, best decision they can arrive at.
Yeah, that's that part for me is like something that like I've not like fully, I guess, explored. It's something that like obviously I've heard about it. I've heard people talk about it. I have podcast guests that bring it up, and it's something that every time I hear about or talk about, it's like more and more exciting. Because in the beginning, like whenever we were a relatively small company, a couple 100,000 annual revenue, it's like, oh, just regular old bookkeepers, perfectly fine.
100%.
Like it's really, really easy to see where the money's going and you know where it's coming from and all that. Now in our journey, it's like I'm looking at the bank and going, so like somebody like one of my business coaches the other day, hey man, what are your average expenses? And I was like, it's not like that in my business, bro. Like I couldn't tell. I can give you the average from the year, but like my monthly expenses greatly differ month to month, mainly because like one of the things we've opted to do is we have a lot of subscriptions. We're a digital agency where like technology subscriptions are huge. And we've opted for annual payments because it saves us a ton of money by going annual. But because of that, there's months where I'll have this random $7,000 payment that like just skews the data. Same thing, like we do a lot of like apparel planning. That skews the data. All of those cost of goods sold that look like revenue is not actually revenue. It's just goods.
So this is a great example, and I'm this is not a shot at you or your accountants or anything like that. So this is an example though where I think like the data maybe isn't tailored the way it could be for you, right? Which is like there are sort of rules that we have to abide by as accountants, right? Where you have like, hey, things need to be presented this way because ultimately that's how they have to be reported for tax purposes or whatever. But that doesn't mean that like the financials that we as business owners get have to mirror those the IRS gets, right? So an example might be maybe those one-time charges that are like you pay annually, that's its own account, right? Where you would go like, hey, here, anything that I pay annually, I just want put in this account because then I know that when I see that number, it's sort of an anomaly and I know that it's not recurring and I have a better sense of like what my recurring expenses are versus what my one-time expenses are. And so part of it is like helping business owners understand like, how do you think of your business? Because when I look at your financials, it should tell me the story that you tell other people. And in a lot of cases, it doesn't, unfortunately, meaning that like you look at the financials, the P&L, namely, because that's what most people tend to look at. And you go, okay, I see you have revenue, but then we get below that and it becomes kind of a mystery, a bit of a maze. Like what is the relationship between these items and your revenue and why are those driving those things? And, you know, could you explain like why your results are this way this month versus last month by looking at this? And this is not a criticism of anyone in particular. It's just, unfortunately, those are the questions that lead to sort of this negative feeling when it comes to accounting, because it tends to create more questions than answers, even though we think of it as trying to do the opposite.
No, you're absolutely right. And it's something that I've tried to figure out how to do. And to be fully transparent, and I think this is helpful for other business owners and agencies out there listening to the show right now, is I opted to go with a company called Bench, Bench. They're an online accounting or online bookkeeping service. And when I started my company, it made a lot of sense because it was the only thing that provided me data, like as a tech CEO, that I found to be I could interpret the data, right? It was really visual. And I was like, okay, versus like prior to that, I'd worked with bookkeepers and accountants that were sending me
financial statements,
P&Ls and stuff like that, and financial statements. And I was like, I don't know what I'm looking at. Like,
you're like, it might as well be in Latin. I have no idea what this means.
Right.
Yeah.
And so I opted for that. But the reality is, like, sure, they're getting my books ready for the end of the year financials and ready for taxes, but it's not actually helpful. Like now, where I'm at in my business now, I'm like, but do we actually have enough money to hire
So
people?
What you just described is the difference, in my opinion, between financials being accurate and decision useful. So they can be right? Like the number, no one's disputing. I'm not suggesting Bench has incorrect information for you, right? And I'm not trying to disparage them. They're a good company, just to be clear. Like Bench, but the problem that often people run into is, okay, what you described. So you just sent me this. You fulfilled the obligation of the engagement letter in that you sent me a P&L and a balance sheet. But I'm not better off with that. Like I didn't actually like, and this is not to change the topic, but this is something I work very much with my clients with, is understanding their goals and defining those goals clearly so that everything that happens upstream is to getting them towards that goal. Right. So like if you're like, hey, my goal is to get a P&L every month, great. Mission accomplished. But if your goal is to get information to help you understand how your business did, well, maybe it isn't getting a P&L. Maybe it's another form of getting that information. Maybe it's, sometimes we'll record Loom videos where I will just walk through in a few minutes over the financials as I'm reviewing it with my team for the client and go, hey, here's what I see in the financials. Let me know if you want to talk through it, because that's how they learn. That's how they see things, right? Maybe it's, like you said, a more chart-based. Maybe it's more metric or KPI-based. There isn't a one-size-fits-all. It comes back to, how do you take in information, and is that information digestible for you?
Yep. Nolan, there can't be a better ad for your company than this podcast.
Right?
I appreciate that.
like seriously, because I feel like I like that you led with the fact that there's a lot of entrepreneurs out there, business owners out there that are lonely. I literally bring that up with people all the time. And I have some friends that are very like entrepreneur minded in their 9-to-5s. And they kind of can get it, but they and they know that they don't completely grasp it, but it's like, it's very lonely. Like it's kind of isolating because you can't relate to a lot of people. They don't understand it like you do. You don't feel like talking to people about it because you feel like you're complaining
100%.
or like people don't relate or whatever. Like it's just it's honestly a pain in the ass, and it's really, really freaking hard. Like it's hard to be a business owner. And honestly, in my opinion, a lot of that is rooted into the awareness of your numbers. Like just like how is my business performing? And the fact that you've got some different like modals, if you will, of being able to present that data based on what the business owner is able to actually, digest and articulate. Like that's so significant. Like as I say, it's like a great ad. Like you didn't come on here to sell to me, but I'm like ready to talk to you, because it's like, dude, like that, because I'm in such a position, and honestly, if I'm feeling it right now, and I've been feeling it the last few months, and even in our own organization, where it's like, I love Bench. Like I really do like the data that I see there, but it's not actually helping me make informed decisions, because whenever the income one month looks like this and down, and every single month it's like, okay, well, what am I actually spending every month? And what am I actually, like, I want to know what my monthly recurring revenue is that's consistently coming in, not one-off jobs, not print jobs, like recurring revenue. And what are my average monthly recurring expenses? Again, not annual payments, but more like, because I need to know, where do I need to grow? Like how much revenue do I need to bring on before I can, pay myself more or hire the next employee? Like, and right now I feel like I don't have that in my business. And like, that's
So what you just described is so crucial. And I appreciate you being honest about sharing. A lot of business owners are uncomfortable with sharing like what they don't know, right? So first thing we all have to understand is there are things we don't know. And if we can at least acknowledge that, then we're going to be more receptive to being aware when those things hit us, right? Or being able to take those things in. But what you just described is so critical, because in the process of understanding how your business is going, you just define your goals to some extent. You may not have realized it, right? But so when I sit down with a business owner, that's what I'm trying to get to. Now, I would want to take it a step further, because I'd want to understand, like, well, why are you wanting those things? So an example might be, when I ask people these questions, it usually starts someplace very high level with like, well, I want to make 7 figures in revenue. Okay, that's awesome. But why? What is that going to give you? And what we ultimately get to down the path of asking that question and digging into it is, maybe I had a client, and I use this example because I love it, and it's very apropos of sort of the situation, which is he just wanted to be able to go pick his kids up from school twice a week. That was his goal. And he, in his mind, he thought he could do that if he was making 7 figures a year in revenue. And what we work through and are still working through is the realization that more doesn't always get you closer to what you're trying to accomplish, and that he needs a certain amount to be able to do that, because he needs to feel comfortable stepping away from doing the job, right? Because as a business owner, if you're not working, there's this sort of like stress of like, well, am I failing because I'm not doing something for the business? And so if something goes wrong, did I just trade my own happiness to some extent for success and I didn't realize it, right? And so he needed to be comfortable with knowing he could take that time off, be there for his kids, be the father he wanted to be in that moment, and still be okay. And so what we're working through is helping him understand the numbers better to be able to do that without the stress of it and be actually present in that moment, which is also key to his goal.
Yeah, exactly. I mean, this is an exercise that my business coach kind of put me through, I think about a month ago. And it was literally like kind of the whys to the whys run out, exactly. Right? Where it's just like, you know, like what does the ideal day look like for me? What does my ideal week look like? Like, what is my, like, and I've got it all written down. Like, I know exactly what I'm working towards. Like, I want to buy a piece of land. I want to have a swimming pool. I want to be able to work only a few days in the office. I want to be able to pay everybody on my team what I feel like they deserve. I want to be able to serve my clients right. I want to take more adventures. Like, I know what I want, but I know that in order to get there, I have to have a better understanding of the data in my business. And I think a big part of that goes back to like this whole conversation, like not another accounting conversation, but, you know, truly just like a better awareness. And I think that this is like not just accounting related. I think it's like, if we were to take like a, you know, 10,000 feet, like, you know, bird's eye view, we'd see that we need to have that same approach in all areas of our business. Are the right people in the right seats? Are we setting goals? Do we have a budget for our business? Like, there's so many layers to this. So I wanted to ask you this though. What do you feel like business owners often overlook when they either at the beginning of their business or when they're trying to scale to the next level? Like, what are the things that people are missing?
So I hope this makes sense. So I'll explain it just after I sort of give the high level. So I think owners, what they tend to miss is not fully appreciating where they are in the life cycle or the process of running their business. Okay. And what I mean by that is day one is going to look a heck of a lot different than day 1,000. And the reason is because, one, you're going to know a lot different, but two, the business is going to be bigger. It's going to be doing different things. Its needs are different. The relationship you have with the business is a relationship. And as with any relationship, it grows and it evolves and it changes over time. And so what I really try to help business owners understand is, one, when you start out, you want to make sure you are taking the right risk-based decisions. So everyone has different risk tolerances, right? And so for some people, I will meet with them and they're like, yeah, I started a business. I go, have you registered? And they were like, no, I'm not worried about that. Okay. Now that's your call. Now that's not my risk preference, right? But that's yours. And so, okay, now that helps me understand sort of your approach to things. Other people are going to come in and go, well, I've done all these things. And I'm like, okay, so now you guys are at opposite ends of the spectrum. And my job is to kind of bring you more towards the middle so that you're not over or under doing what you're supposed to be doing at this stage in the development of the business, right? And so that's sort of the startup phase. And then as they move into the growth phase, if you will, understanding that the problems you had are going to now change. So one of the things I talk about with clients is they call it the rule of 3 and 10. I didn't come up with this. It's less of a rule, more of a principle. I don't know if you guys are familiar with this at all. Okay, perfect. So sorry to repeat it, Andrew, but I'll just, the idea basically is that when you go from 1 to 3, 3 to 10, 10 to 30, 30 to 100, things break down at those intervals, right? And so the easiest example of this is always this idea that like when it's just you running a business, it's very easy to do, right? Because it's just the left hand talking to the right hand. That's simple, right? Like if I need to process an invoice, well, guess what? I go into the system and I process the invoice and I review it because it's me and only me. Now, fast forward a few years, now you've gotten bigger. Now you have a billing department and there's 2 people doing billing in addition to you. Well, now you have to have the process you had before, which is just you. It isn't going to work anymore because someone's preparing it. Someone else needs to review it. And neither of those people are you. So now you have to have controls and processes in place that are going to solve that problem. Otherwise, it's going to break and you're going to wonder why things aren't working the way they're working. Now, that's an operational example, but it's all the same, which is that fundamentally you have to understand that as your business evolves, it's going to need different things at each phase along the way. And it's critical to not over or underdo at each phase.
Yeah.
Yep. Golly, man, there's just
I know there was a lot in there to unpack, right? I love how I think I'm going to address the process you had won't work anymore because we're talking growth hacks here. And so, the process that you have right now, if you're looking at growing your business, you need to be looking at those factors that are going to come into play.
100% right.
Can you talk a little bit about what some of those factors may be specifically?
So some of the factors are unique to the situation, right? But your question is spot on, John, which is at the end of the day, it isn't always knowing, and I don't mean to give a political answer, which is going to sound like a non-answer, but like what I mean is by this is that you aren't always going to know what the answer to that growth problem is going to be, because sometimes the problem hasn't revealed itself. But so much of it is knowing that there's going to be a problem and being open to it coming to you, right? So a lot of the times we resist change coming our way. We don't like change, let's be honest. People who say they like change are lying to you. What they really like are making decisions that they can control, and that's not the same as change, okay? So things are going to change in your business, and you have to be okay with the idea that when it comes, you're ready to deal with that problem, okay? And so that's the first step, is being open to the idea that problems are going to arise and you're going to have to solve them. But the other piece is, like I said, expecting that that's going to happen. So what we can sometimes then do with the clients is go, okay, you're looking to do this, and this is how you're going to look to grow. You're going to be adding these people. This is what that cost is going to look like. So now let's run some scenarios about where the stress, like a stress test, essentially, like where is this going to break down in the process right now? So if this is how it's being done, so one of the things is we help, and this is more on the accounting side thing, but we help businesses put into place policies and procedures, right? So that their accounting processes are documented, so that as people come into the equation, the same tasks are being done. It's just the delegation of those tasks, right? So that's how we help them grow. Is that okay, so maybe you're just one person doing accounting and you may not think that it's needed right now to have this documented, but it's better to have it now and understand what you're doing so that when it's ready to bring that next person on, you know how to do it. You can use those procedures to train that person, and you're playing ahead as opposed to playing from behind. Because especially when it comes to adding people, and that's usually the scenario we're talking about, we always sort of underestimate the downtime that happens at first when you bring someone new on. We get this mystique of going hey, I'm going to hire this person. They're a great person. Immediately this problem of mine is going to go away. That's a lie. What actually happens, right, as we know as business owners, you bring someone on, it's 2 to 3 months of a lot of work to get that person up to a point where you can have them doing what you need to do. So you have to be sort of ahead of the game before that person comes on. Otherwise, you're going to be really far behind it.
Yeah, I mean, documented processes and procedures, SOP, is huge. That was something that we finally did, I don't know, 5 or 6 years ago. And I'm sure that there's other ones that we should document that aren't currently, but it was a transformation in our business. I mean, like no exaggeration, because we were kind of just winging it all the time because we knew the processes, so we just did it. But then what happens is, as you start to onboard not only new employees, but also new clients and new projects, all of a sudden you start to forget things along the way, right? Like one of the ones that such a simple but terrible mistake that we were missing all the time before we documented our processes was when we would launch a new client's website, we would forget to install Google Analytics. 6 months down the road, client hits you up, hey, how's our website performing? And you're like, yeah, give me a second, I'll go pull the data.
Great.
There is no data. Now you have to bullshit some excuse, And so that for us, that was a big deal. Like, we have to document this so that no matter how busy we get, so that no matter who's working on the project, no matter if I get sick or if I decide to sell the company, anybody who falls into this position will know how to do this job. And that was the big thing for me, was the selling. Okay,
so I am glad you mentioned that, because that was going to be my next point. So perfect, team me up. I appreciate it. So we have been talking about this from a growth perspective, right? But And I don't know, I have some thoughts on why this is, but like there's a lot of people looking to exit businesses right now. I don't know. I think some of it is generational. I think some of it is the compounding delay of COVID and sort of people not being able to get out for several years, and it's sort of compressing this into a single period. But
yeah,
I cannot stress the value of having this stuff done in advance of a sale. So one of the things that like you kind of got to think of when you're wanting to exit a business, one, you want to be thinking about it several years before you think it's going to happen, because you want to make sure everything is tied up nicely. All your tax returns are in good order. All your financials are in good order. All your documentation is in good order, because what you want to be able to do is, as you go through the due diligence process of an exit, what I mean by that is basically the research being done by the buyer. You want to be able, every time a question comes up, to be able to go here, and you just hand them over this very nice little set of information. And what happens is every time they ask a question, when you just have the answer for them and it's clean and it looks nice, it just sort of erodes their ability to poke holes in what you're doing and ultimately try to drive down the valuation of the business. So not only is it good for what you just described in terms of continuity, but it's also critical for the valuation side of it and sort of the negotiation aspect of the business.
Yep. Yeah, that was something that a mentor told me early on. They were like, dude, your business is worth nothing if it's not going to be able to run and operate without you. And I was like, okay, but like, what does that mean? And they were like, if tomorrow you stepped out, could somebody pick up where you left off and know exactly where each project's at, how to do it, how to carry that project through? And I was like, and nope. Like, it very much needs me, you know? Yeah. And so that was the reason why we even started to document our processes. Shout out to a software if you are looking at documenting processes. Process Street, process.st is incredible for documenting processes, but it's not just a process documentation tool. You can actually run those processes like to-do lists, assign people, create deadlines, have stop tasks. Anyways, side note, they're not a sponsor or anything.
Not yet. They might be after that plug.
Now they are. Yeah. But an incredible tool. I mean, and after we did that, it helped us just improve our customer experience and the relationship we were having and making sure we were doing things. Obviously, I know that there was kind of that future-proof component where if I ever do decide to exit or I pass it on or whatever else, I'm kind of safeguarded there. And then I think more than anything, as I've personally tried to kind of step more into a CEO role and out of the project manager fulfillment role, it's allowed me to say, hey, so-and-so on the team, Desiree, for example. Hey, Desiree, we've already got the process documented. You can actually just check right in here, and this is what needs to happen. If you have questions about it, I'd be happy to answer them while we make this transition, but everything's documented here, including Loom videos we've recorded that walk you through it and everything. So that's been huge. Something else that I wanted to talk to you about specifically, because I think that the question I think a lot of people that are listening to this podcast might wonder is like, okay, I'm ready to outsource. Like you're speaking my love language. I hate finances. Yeah. I hate everything you're talking about. I need somebody to do it. I want to look at the data better. What would you say are the factors business owners should consider when deciding who to outsource these certain financial functions to?
Great question. So I'm going to refer back to a couple things we've talked about because I think they're relevant to bring into sort of answering that question. So one is we kind of jokingly went over how there's different names for accounting, right? So I think the first thing is understanding who you're hiring and what they are, in other words, right? So are you hiring a CPA? Are you hiring a bookkeeper? Are you hiring someone who doesn't have an accounting degree? None of those are necessarily wrong per se, but I think it's important to understand what their actual title or credentials are, because then that helps you have a better sense of what you can really expect from them, right? So a CPA, kind of like I'll say is the attorney equal, right? In the sense that they have an ethical obligation, they have to maintain continuing education every year. There's a license. They have to pass a test. So a higher standard in terms of getting that. That doesn't mean that they're always going to be better. It just means that that's what comes with getting that title, right? So I think first thing is understanding who are you actually hiring in that process, right? I think the second thing is, and I kind of going back to something else we talked about, is when you're talking to the person, be very direct about what your expectations are, okay? So what I mean by that is it's not rude, and I actually really appreciate when I'm talking to someone and they're interested in working with me, when they go, what can I expect from you in terms of response times? What can I expect from you in terms of what you're going to deliver? When is it going to be delivered by? These are reasonable questions. And if the person is unwilling to sort of commit to it, then you may want to ask, well, why is that? And if that's important to you, maybe it isn't, but like if that's something that's really critical to you, like you want your financial statements by a certain day of the month every time, then be honest about that. Otherwise, you're just going to end up having, what you're basically doing is getting into a relationship you know you're going to break up with down the road. And we don't want to have that, right? I think the other thing too is it's good to talk to multiple people. So I would love if everyone just knocked on my door and was like, I want to hire you. But I also really appreciate when people come to me and they're like, well, I'm talking with other people. And I go, good. I think that's wonderful. I think you should talk to other people. Like, you need to have a sense of like benchmarking me against them and them against me. And if you talk to them and there's something they said that I didn't, come back to me, ask me the same question, or, you know, those types of things. Like, there's no shame in that. Like, I don't think that's shopping. I think that's just doing your due diligence. Like, if you're going to remodel your house, do you just meet with one contractor? I mean, I hope not. I hope you meet with several of them, and you kind of get some sense of like what their engagement is like and how they work with things. And so I think those are the key pieces, I would say, in terms of like vetting the individual and in terms of like finding that person for yourself that are really going to help make sure that it's a good relationship for you.
Absolutely. Something I'll give you the little selfish plug here since you won't do it for yourself. One of the things that's unique about you guys is y'all are more of a family, I guess, call it family practice, essentially. Talk about that a little bit. I mean, how is that different, and what are the benefits of that? Yeah.
So, at a high level, you may have heard the term family office. Sometimes that's get thrown around, but I think people maybe think of Succession when they think of family office, like this multi-billion-dollar family and like this huge like thing. And yes, that is a type of family office. Historically speaking, family offices or family type of accounting have always sort of been for I'll say the uber wealthy, because that's what it necessitated. Their wealth makeup necessitated basically running their personal side as a business. That's kind of the idea behind it, right? But what I have found is that small business owners often would benefit from the same approach, just on a smaller scale. And so what I mean by that is, and this comes back to that goal-oriented thing. What are we trying to solve for? What are you trying to get to? How do you know when enough is enough and you're at that point so you can actually enjoy it, right? And so part of that is helping them create I'll say an ecosystem, if you will, where it's an accountant, maybe that's me, maybe it's their CPA who's doing their taxes. I am a CPA, but I'm just for the purposes of the example, sort of someone else doing taxes. It's an attorney, having someone there who's giving you the legal advice. It's usually a wealth advisor, and that you're kind of meeting with them on a regular cadence, and that you have this sort of personal balance sheet, if you will, of what are your assets, what are your liabilities, what is your wealth then at that point in time? Because ultimately, the business for a lot of people funds a lifestyle. Okay, well then we should be accounting at the lifestyle level as well. How do you know that the wealth is there, not just for you, but for your kids, maybe your grandkids, generations down the road, depending upon how you view it? Like, what is it you're trying to create for your family and your lineage? And so what I found for a lot of people is it isn't just about, well, I want a vacation home. That's awesome. But they're like, I want that vacation home because I want it to be there for my grandkids. Okay, well then that's a more holistic, not to use a buzzword, if you're playing along at home, bingo jargon right there, you can get to that, bing, but a more holistic approach to your well-being and your financial wealth and everything. And so what I try to help people understand is we don't have to go overboard, but we can track your expenses for you. We can help you understand your personal budgeting side of things, and we can help you see, are you making the same decisions that you would make in a business as you would for your personal life? Because what oftentimes happens, and I'm guilty of this because this probably is no surprise, I do this for my own family, but you start to track your expenses. You go, I spent how much on what last month? And you're like, oh my goodness, like that was way more than I expected. Or we tell ourselves, the one that I always love that's most common is people go, oh, well, that was a one-time thing. And I go, well, it's been a one-time thing for 5 months in a row. So does that change your opinion on it? And it's like, it's a recurring one time is what we like to call it. So, those are things that are really eye-opening to people, and it helps them get a better grasp on where they're at, where the money's coming from. Because what you don't want to have happen is they bust themselves on the business side to create all this money, and then, forgive my language, but they just to piss it away at home. And that I don't want that for anyone, right? I don't want them to be sacrificing and working really hard to not end up with the ultimate goal they want. And it's usually for most people some sort of family component to it. And so that's where we sort of have this idea that it's like a family office light, if you will, which is like we help people kind of put this in place, have the right approach to it, introduce them to the right other team members so that they're regularly meeting with the right group of people to have a very good sounding board and to getting the right expert opinions across all those sort of levels for their personal situation. Maybe you have a lot of real estate. Okay, well, maybe there's a broker that you're using and that sort of is going to factor into this as well. Whatever your situation is, we're creating a family office, if you will, to be able to make sure that your long-term wealth for not just you, but generationally is taken care of.
Yep. Yeah, that's so valuable. I mean, this is something I've recently done, and I don't even feel like I'm nowhere near the need for those people yet in my business. But it doesn't change the fact that I should already be thinking ahead, like a proactive versus a reactive approach, right? It's like you don't want to figure all this out when it's too late or when you already pissed the money away, like you said. It's like, let's be thinking about it now. I mean, I remember when I first sat down with my wealth advisor, he was like, it was pretty funny because we were talking about like what I wanted out of life and, you know, like my future and kind of just the, you know, future generations and all that stuff. And he was like, you know, your business is like a part of your like retirement strategy. And I was like, what? Like for me, it's just like for so long I had looked at it to some extent as like, this is just my job. Like this is where I work. This is what I do. Instead of working for Chick-fil-A or Apple or whatever, I work for Beefy Marketing, which just so happens to be my company. But he kind of shifted my mindset to be like, no, dude, like that thing can like pay for your retirement and your future grandkids if they wanted. Like it's much bigger like than just yourself. And like that was the first time I'd really thought about it. And so it's like, I love that approach. I think that I like that you guys do that. I think more people that are hiring these experts need to take that approach where it's well-rounded, where your wealth advisor is talking to your tax person or your accountant or your bookkeeper, because everything needs to be aligned. Like if no one knows what your goals are, then are you actually making the right decisions? And, you know, it's funny that you brought up the whole, like the personal budget kind of thing, because I recently was talking to one of my friends who runs a nonprofit organization, and he told me what he makes, and this is his full-time job. And he told me what he makes, and I was like, "It's like how do you pay all your bills? Like it's not a lot of money." And he's like, "Oh, our expenses every month are only it's like a few $1,000s a month." And I was like, would you mind breaking that down for me? And he was like, "Well, what are your expenses?" And I told him, and he was like, holy shit, like that's a lot of expenses. And I was like, bro, I don't even think I'm like being frivolous. And so I literally took that, no joke, that weekend I got home, I created a spreadsheet and I broke it down. I'm pulling it up right now so I can look at it by essentials, debt reduction and savings, and discretionary spending. I broke it down because I truly wanted to know, like, where am I spending money? And like, I wanted to know how much of my spending is discretionary. Like, am I just like being like an idiot with my money? And like, come to find out I'm not. It's only 4% of my total monthly budget is going to discretionary stuff. But it was just like, I've got, you know, and I guess some of them are borderline. Like I have like a brand new, like my girlfriend got a brand new car. Like, okay, that could be considered discretionary. Like we could have been okay with keeping the car she had, you know, but I have a lot of student loans. I have like, you know, like things like that I'm still paying for. But it was really interesting because what I did after that conversation was I called a few different friends. I was like, hey, can I ask you kind of a personal question? And they're like, sure. I was like, can I benchmark my monthly expenses to yours? Like, I want to know if I'm like far out, like, you know, kind of like an outlier, or if I'm like in the norm. And after like 4 or 5 calls, I was like, I'm a bit of an outlier. Like now I realize it's all relative to your situation and everything else, but it's like, okay, I might need to rein this in a little bit. Like, what do I need to stop spending money on? Because like, if every other friend of mine's monthly expenses are $5,000 a month and mine are $9,000, okay, like, am I being an idiot? You know, am I making poor decisions? And maybe the answer is no, but it's still helpful to like have the awareness again around what those numbers are.
100%. There's a couple things I love that you called out that I want to reemphasize. So one, you speak in my love language with words like discretionary. That is like right in my wheelhouse. Yes. So that's actually one of the things I do when I help people create like their own set of financials for their personal, is that like I break it down into discretionary and non-discretionary, because I want them to understand like what is the number you have to really then spend on everything else. And at that point, everything below that line, that's you. You can do what you want with that, but above that line, you've got to make sure you have that to cover it, right? So that I love that you're taking that approach. I think the second thing I just want to emphasize to people is the thought process you went to this. So there are questions that I think you would say you would probably agree you're still trying to get answers to. But the important part of this is that you've at least labeled those questions. And now that's the first part to being able to get the answers for them, right? It isn't so much that like you have the answers now, but now you know that that question exists. And now it's something that you can decide like, well, do I want to get the answer to that? Am I worried about that? What would it take to get those things? And that's so important in terms of getting clarity on where you're at and what you're trying to accomplish. Because if we don't ask those questions to begin with, if we aren't naturally curious about why that is what it is, then we're just kind of destined to repeat ourselves in the same part. And that's okay. Like I'm not shaming anyone who isn't naturally curious more though, but if you're looking to get beyond where you're currently at or make some sort of change, you do have to do something different.
Yeah, that's the biggest thing. Like I grew up extreme poverty. And so because of that, I still have family members that I think are kind of tied to those chains that are like generational curses, you can call it or whatever. There's another buzzword, right? But I think that like, as I talk to some of those people, they're like, I'm so broke. Like I can't do anything. I just can't seem to get out of it. And it's like, well, have you taken the time to like figure out why? Yeah. Like, I'm not saying it's fixable. I'm not saying it's solvable overnight, but I'm saying, do you have an awareness of why you're broke? I don't think people really take the time and invest the time to figure it out.
So this is key because I love this. This is such a great conversation because you're bringing up so many things I talk about with clients. So one of them is we do not give ourselves permission to talk about our goals or why our goals are what they are or why we aren't achieving them. It's like taboo to some extent. Like it's like, especially when it's financial or money related, the fact that you were able to talk to friends about their expenses, that's amazing, quite honestly, because most people are not comfortable asking that question, let alone having it shared back to them, because we just don't talk about it, right? And so what ends up happening is we get ourselves in these mindsets of, and I'm not saying this is the only reason, please don't hear this, that people aren't as successful as they are, but part of it is we label ourselves as I am broke, I am poor, and I am unsuccessful. And look, I do, you can disagree with me, but I do believe in manifestation. If you tell yourself that, you're not helping yourselves. Like it may not, saying you're going to be rich may not make you rich, but it's also not going to hold you back. But if you tell yourself you're broke, I'm sorry, you are going to be broke. Like there's very few instances where people just call it what it is. And like, they aren't able to move past that because you have labeled yourself as something that isn't what you want to be. And so
you're accepting
defeat. You are, you're right. You've labeled it and you've categorized yourself as it, as silly as that sounds. And that is a big limiting factor. And so part of the whole process, this is why I think accounting is so important, because accounting is the reflection, it's the telling of what actually is. And so sometimes it gets a bad rap for being historical or backward looking, which I agree. We accountants need to be better about looking ahead. But it is also, it is the storybook of what has happened, right? When we look at like other generations and they have these books about like what happened to their society, that is the accounting of what happened to their society, right? It may not be numbers, but it is still the actual writing down of what happened. And that's where accounting is so critical. We can use it to make better decisions going forward. We can learn from what we did so that we don't make those same mistakes again, or that we repeat those great things that we did in the past. And that's where it's so critical to have such good data up front. If you have bad data, none of this matters. It does not matter, right? People who come to you and they say like, I want to do better tax planning. Great. If you have garbage data, you're going to have garbage tax planning. I hate to tell you that. Nothing is going to change that for you. You need to have good data to be able to make good decisions. And that's where it all starts with.
Yep. Nolan, this is one of those conversations that could go for hours. Because like it's seriously, it's like it's a conversation that needs to be had. I mean, the fact that even you kind of acknowledge my transparency with some of my friends where it's like, hey, like I'm going to just have this conversation. Like it's tough. I'm okay with that personally, because it's like, I can only grow by benchmarking myself to those around me. And sometimes I might be, an overperformer and sometimes I'm an underperformer, and like, that's okay. But like, I think more people need to do it. Like I'll use a great example. One of my sisters, like I love her a lot. She really struggles with her budget. And I know that she works on this. Like she's aware and she tries to work on it. But I asked her one day, I was like, so like, what are your utilities, for example? She was paying like a $600 monthly electricity bill. in a two or three bedroom home and she lives by herself. It's like, your electricity bill should not be $600.
Yeah.
If you benchmarked that to your neighbors, your friends, your other family members, you would know that it's time to call the electricity company.
It might be your neighbors that are plugged into your house. That's
exactly. Change your meter. Figure out who's like sucking off of your power system. Like, do whatever it takes, because you're not paying what you should be. And I think sometimes we compare ourselves too much to other people, and then I think sometimes we don't do a good job enough looking and like growing from the people around us. So that's my word of advice.
100%.
But I'm gonna let you end this thing with an icebreaker.
Icebreaker.
Oh, not an icebreaker. What's an icebreaker? That's what we started with.
Yeah.
Hacks. All right, that's what we were actually looking for. What's up, Nolan?
There it is.
Can you give us a business growth hack to leave the listeners with?
Yeah, so this is going to sound, at the risk of sounding really simple, I do believe in the power of simple. So as a business owner, I think that there has become this idea that debt is an evil thing and that we shouldn't have debt. And I understand that, like, especially you have to know yourself. For some people, having debt, not a safe thing. So I'm not advocating that if you fall in that bucket. But if you're able to get yourself a line of credit, get yourself a line of credit. And it's like the singular thing that I recommend every business owner do. And the reason is because it's another insurance policy. If things go bad, if you have a rough month, you need to, or maybe the other thing is there's an opportunity for you to invest in something and you need that money. That's your opportunity. You should have that money available for you. And so if you can go out and get a line of credit, do it. And ironically enough, now can be a really good time because interest rates are really high. Banks love to give you money when it costs a lot to give it to you. But here's the thing about a line of credit. You don't pay anything unless you take money out. So it can sit there. You may pay like $100 a year to have access to $150,000 of credit. That is a killer deal right now. You should definitely take advantage of that. And so I recommend business owners, if you can, get yourself a line of credit, use it for advantages when it come along, rainy day or the opportunity is there. It's not going to surprise you. I have a formula that I tell my kids. This is what I tell them every day, and I'm sure they hate me for it, but I tell them success is opportunity plus preparedness. And what I mean by that is that, like, you can't control opportunity all the time, but you can control preparedness. So be prepared so that when the opportunity comes, you will be successful.
Dang. No joke. This is not just like me, like, tooting your horn, but like, if we could do a whole episode about business line of credits, I would genuinely love to do that, because it's a topic that, it's funny that you ended with it, because it's it's kind of a sore topic right now for my business. We kind of had like a really weird month last month, and for the first time in like 10 years, I was in a cash flow type position where we couldn't run payroll as usual, and I had to tap into that line of credit, which is the first time we'd ever had.
But you're glad you had it, aren't you?
And I was so glad I had it, but I also have like a lot of guilt and shame around it. So which is interesting, which is why I'm like, I think we should have a whole topic about that, because I think that business owners also look at that line of credit as like a last resort, like break if there's an emergency. And I had to break that. And it's like, well, am I a failure because of that?
Yeah, that's
like,
a real,
So it's like, that's a whole thing to unpack there. So we could have some of that conversation offline. But I think in general, it would be really cool to have a whole podcast episode centered around like some of that, because I think there's a lot of other business owners that probably would feel the same way, or like, I'm not even going to get that line of credit because I'm afraid that I'm going to always have to use it, or it's whatever. And it's like, sure, you don't want to like run off somebody else's money necessarily, but
I would love to do that if you're being serious. I think there's a lot there, because I would even expand it to, in general, the guilt and shame that is existent as a business owner. Like that is a real thing that I would say is a huge limiting factor for business owners. Like just the stories we tell ourselves, the word should, that's a loaded word, and it can be really damaging for people. So I get that, but I think that lines of credit can be really valuable things. And so if you can be comfortable with it, again, I don't want to force people to do something they aren't, but I would definitely recommend people explore getting one if you can.
Well, guys, be on the lookout for another episode all about
Yep. Let us know in the comments.
Guilt, that's right.
Your two favorite topics.
Guilt and accounting.
Nolan, tell people how we can support you. What can we do to find you online? All that good stuff.
Yeah. So name of the company is Bradfield Accounting. My name is not Bradfield, just so you know. It's Bradbury. That's the combination of my name and my wife's last name. So it's a homage to her. So Bradfield. You can find us at bradfieldaccounting.com. You can contact us. There's a very short survey there. You can also reach out to us at a very creative email called contactus@bradfieldco.com. It's bradfieldco.com. if you just mention this podcast, just so I know where you're coming from. I always love to shout back to people and let them know we got connected that way. But feel free to reach out if you're interested in learning more about us and how we might be able to work together. And what I always tell people is, whether I can help you or not, I want to give you something that you can take away from talking with me. So there's really no harm in reaching out if you're interested or want to learn something. So.
And if you listen to this whole episode, you know you're going to take something out of that conversation.
I hope so, yeah.
Because there's been so much value here. Hey, Nolan, I again want to say how much I'm grateful for this conversation. It's been, we kind of always joke internally about how these episodes are an opportunity for us to learn from people who are smarter than us. And I definitely feel that way about today's episode. So thank you again. Everybody out there listening, appreciate you guys for supporting us every single week. Make sure you share this episode. If you know somebody who's struggling in the numbers department, in the money department, goals, guilt, accounting, this is the episode for them. So share it with a friend, tag people, leave us a review, let us know what you think about the show, because we don't know if you're actually listening if you don't tell us. So until next time, we'll see you guys later.
Thank you for listening to another episode of the Business Growth Hacks Podcast. Be sure to subscribe wherever you get your podcasts so you never miss an episode. To get more marketing tips and tricks, follow Beefy Marketing on Facebook, Instagram, and YouTube at Beefy Marketing. And to take your business to the next level, check out our website at www.beefymarketing.com.